Hi, my name is Mike Hetman, and welcome to another edition of CMS Forex News. Today is Tuesday, March 4th, 2008. Australian retail sales came in flat for January. This release ends a streak of growing retail sales which started in June 2007. It suggests that the 1% interest rate increase spread throughout last year has worked its way to keep the economy from bubbling. The current account deficit also widened as the Aussie has been appreciating. The Reserve Bank of Australia decided to tag on another 25 basis points to its interest rate. The TDMA inflation gauge showed that prices surged an annual 4%. Therefore, the rate hike was highly anticipated. The Australian dollar retreated after Bank Governor Stevens signaled that consumer spending is moderating. The economy shows signs of peaking after a year of spread-out rate hikes. The Aussie dipped 150 pips versus the greenback overnight and into New York trading. Swiss inflation remained slightly elevated in February as commodity prices have been rising. Swiss GDP bested expectations and came in at an annualized growth rate of 3.6% in the fourth quarter of 2007. Economists are expecting the Swiss economy to cool off this year as the U.S. housing crisis continues to decline and a slowdown deepens. In the Eurozone, prices of goods leaving factory gates rose 0.8%, the largest increase in 17 months. This underpins upward risk for inflationary pressure. Unlike the Fed, the ECB has expressed more concerns on inflation than on economic risks. Meanwhile, the Eurozone GDP for the fourth quarter in 2007 repeated the same lackluster pace of 0.4% in the third quarter. Consumer spending fell for the first time in 6 years as companies scale back in investments. The job market may have been resilient, but as investment capital recedes, employment might not hold up as well. The euro also stalled its surge on the greenback today. It has been trading in a range since last Friday and today, reinforced the 1.5250 level as resistance. The Bank of Canada surprised some economists who predicted a 25 basis point cut. Instead, policymakers felt a deeper cut of 50 basis points was warranted as its neighbors' economic woes are worsening. The connectivity of the two economies is based on the fact that the U.S. takes on 80% of Canada's exports. Therefore, Canada will feel the first ripple from a U.S. recession. For this reason, the statements from bank officials were dovish and pointed to further rate cuts. The Canadian dollar may be reaching a peak after gaining 17% in 2007. After the Bank of Canada cut rates by 50 basis points, it signaled further accommodating policies. In the first couple of hours following the bank statement, the U.S. dollar-Canadian dollar pair jumped 80 pips. For the past week, the U.S. stock market has been in a steady decline. Some pulled investments from U.S. equities into commodities, which is one of the factors for the record-high oil prices. Also, risk aversion has been a major driver in the yen gaining across the board. As a result, the pound-yen pair slid more than 900 pips since last Wednesday. Overnight, we can expect services PMI from Australia, Germany, the Eurozone, and the UK. Also, Australia will release its GDP and the Eurozone its retail sales. Tomorrow morning will bring the ADP employment report among other job market data. The U.S. finishes with its services PMI. In the afternoon, New Zealand will be expected to hold the key interest rate at 8.25%. And this wraps up the day in Forex News. I'm Mike Hetman. Join us here tomorrow at cmsfx.com.